Stock market and SoFi investors, welcome back to the channel. My name is Jason. I got a great video lined up for you guys today. In the first half of this video, I want to talk about SoFi stock and some interesting articles that just came out over the last couple of days. And in the second half, I want to go over some stocks that I'm adding to with the recent sell-off in tech over the last several months. So, first, with SoFi. The stock is doing okay today, pretty much trading sideways in that $18.50 range. But every once in a while, I like to go on Google and just type in SoFi stock. And take a look at your screen right now. Some crazy articles pop up like this one. Could investing $10,000 in SoFi stock make you a millionaire? Seems like a bold strategy, Cotton. But yo, listen. Don't get so tied up in all these extreme situations with SoFi stock. Focus on the fundamentals, and I promise you, in the long term, you're going to make money. Are you going to turn 10 grand into $1 million? I'm going to go over some scenarios, but it's highly unlikely. But there are some circumstances where it could potentially garner those type of returns. So let's take a look at this article and see what it has to say. The market hasn't been too happy with SoFi stock so far this year. It's down about 30%. However, that's a short amount of time in a much longer story. Inclusive of the drop, SoFi stock has gained about 180% during the last 3 years and has long growth runway, long-term investing. It's all about riding the waves and staying the course with stocks you believe in. That I agree with 100,000%. Could SoFi stock be added to the S&P 500? This chart says it is possible. Which companies add it to S&P 500 in Q1 2026? We'll have to see how that all shakes out. But it's not if, it's just when that will happen. This could be an excellent opportunity for investors to buy on the dip and hold for many years. If you invest 10 grand in SoFi stock today, can it make you a millionaire? Banking for millennials. They're going to go over some statistics and state whether or not they can turn 10 grand into $1 million. So with 10 grand today, it buys you around 550 shares of SoFi. Not a ton of shares. I currently own 6,500 shares of SoFi in all of my brokerage accounts, but that would be pretty awesome if it went to those levels. That is for sure. So SoFi is an all-digital bank, and it's capturing market share as it targets the younger users who are using banking and financial services for the first time. Not only is it attracting new users at a fast pace, 35% year over year in 2025 fourth quarter, but the number of new users has been hitting new highs every quarter, reaching 1 million in the fourth quarter. It now has a total of 13.7 million members. So the company is growing astronomically with their members, and the members have been correlating into dollars on the top and bottom line, which is always a great thing, right? Adjusted net revenue, 37% year over year growth. So all these numbers look pretty good, but can it 100x? Because that's kind of where we're going to have to be at in order to get to that $1 million. For a $10,000 investment to reach $1 million, it needs to rise 100-fold or 10,000%. The amount of stocks that run up 10,000% in their lifetime, not a lot. But it does say it could happen over the long term. Today, SoFi's market cap is $23 billion, and increasing it 100 times would make it $2.3 trillion. Woo, baby. Although not impossible, that would be a fantastic achievement. Even JP Morgan, the largest bank in the U.S., and most valuable by market cap, is valued at only $770 billion. But we also have to take inflation. For it to get to this mark, we're talking 25 years down the road, 20 years down the road for sure. As fast as I see SoFi growing, I don't think 10,000 investment alone can make you a millionaire. I agree with that statement. So here are the numbers that I ran for SoFi stock. I'm going to zoom in this a little bit with you guys. This is a 25 PE, 25% EPS growth from 2026 to 2025. To remain this consistent with earnings per share growth would be a remarkable feat, right? So that would make it $4,000 a share. So you plug in 4,000 times that by the 550 shares that you got for your $10,000 investment. That would be 2.2 million. This scenario for a company trading at a 25 PE is doable, but to average 25% EPS growth for 25 years, I don't think that's going to happen, straight up. But here are some other scenarios I put together. A 20% EPS growth and a 25 PE ratio from 2026 to 2050. This is a little more doable in my opinion. Is it going to happen? That remains to be seen, right, guys? But in this particular situation, at 550 shares, we're going to times that by the stock price here in 2050, 1,193. That gives us $656,000 off of our $10,000 investment. That is the middle range, right? I think it's a doable feat. 25 PE, 20% EPS growth. Okay, I also ran one more for us here. This is a 20 PE and 15% annual EPS growth from 2025 to 2050. This is a little lower on the PE ratio. That's going to come down as earnings per share growth comes down as well. So at 20 PE ratio, at a 15% annual EPS, in 2030, it would be a $21 stock. 2040 would be an $85 stock, and by 2050, it would be a $343 stock. This is probably worst case scenario for SoFi. Again, guys, this is with a 20 PE and a consistent 15% annual EPS year over year. This is probably more on the worst case scenario. So that would take your 550 shares times that by 343. And that would give you $188,000 on a $10,000 investment. Still an 18x on your money over 25 years. Not great, but it's okay. And then if we plug in something in the regards to a 25 PE, and let's say 20%, that's probably going to probably be like right in the sweet spot of where this could potentially be at in the long term. Yeah, I think that we plugged that in earlier. That is around $1,193 per share if we could average 20% EPS with the 25 price to earnings ratio. So can 10 grand turn into $1 million? I'm going to say no on that regard. But could 10 grand turn into $500,000? 250K? I think that's definitely doable in that time frame. But even going from 2026 to 2035, that's 10 years from now, at an $80 stock price, not bad returns. So now, with where we're at right now with SoFi, if we could buy it in that $15 range, these numbers change considerably and could really boost your chance of getting to that $1 million. Because for a $10,000 investment at $15 per share, that gives you a lot more shares to work with. You know, closing in on 700 shares, right? So that makes these numbers a lot better. So what am I doing with SoFi stock? I'm actually doing a wheel strategy where I'm selling cover calls in that $21 to $23 range and selling puts in that $17, $16, and $15 range. That's an option strategy. I do have option videos from my SoFi stock and let you know what options I'm running. I'll leave a link for that video in the description down below. Now, I just want to talk about some stocks I'm buying right now. I love Microsoft. It's down 15% this year alone from the peak back in late October to where we were down. I was down almost 30%. PE ratio looking pretty solid at 25. I like where Microsoft is trading right now. The Magnificent Seven has not performed well at all this year. So that could be a buying opportunity for us. The forward PE under 22, the PEG ratio approaching 1. I like this situation for Microsoft. The price to sales, not great. It is lower than it traditionally has traded for, which is always a good thing, right? When you look at it in totality. Total cash, about $90 billion. Total debt, $123, but the levered free cash flow of $50 billion could service this debt very well. So I'm not concerned about that at all whatsoever. So Microsoft is a stock I'm adding to right now. All right, here's Shopify, trading at a huge premium compared to Microsoft, obviously. All right, we take a look at this stock. We're going to break down some of the statistics. It's down huge. If we go to the summary and look at the stock price over the last year, we kind of peaked up in that $182 range. We're in the 120s still. I think if this stock goes under $100, I'm going to be a buyer of Shopify. I'm adding slowly. I'm selling puts on Shopify in that 115, 110 range over the next couple of months. And the premium I'm getting, I'm just adding a share here, adding a share there. So the forward PE is considerably cheaper than the trailing PE. So that means earnings are expected to go up considerably. And the PEG ratio at 10 compared to Microsoft at what? 1.5? Microsoft is a deal right now, guys. An absolute deal. Shopify is still trading really rich, but under $100 per share. If we get to that point with the macro stuff and the war going on, maybe I'll start to add to Shopify. I do like the business model long term. One thing I really like about this stock is check out the total cash. About $6 billion in cash and only $188 million in debt with over $1 billion in free cash flow. And that's why Shopify is trading at such a premium, because they don't have the debt load that a company like Microsoft has. The short percentage of the float, less than 1.5%. I do like Shopify long term. Next, Hood. Robinhood Markets getting smoked this year, down 31%. This trades right in conjunction with crypto. So if you take a look from peak, what's that, like $152, $150 to trough, down over 50%. I think this stock at a 50% discount looks pretty juicy to me. Do we think crypto could get cut in half again? That's a possibility. Crypto is a very fickle beast, right? So we're not quite sure where that's going to roll. But starting to add a stock when it's already down 50%, which with pretty good numbers looks decent to me. The forward PE at 34.25, pretty cheap. Hasn't been this cheap in a long time. It was up to almost 70. So that's something to take into consideration. The price to sales, pretty high. It's traded way higher in its past, but it's also traded lower. So for me, Hood stock is trading in that $75 to $80 range now. In the 60s, 65 is really where I want to start buying heavy. This is another stock. I'm selling some puts, adding a share there, adding a share there. Just kind of like very cautiously and slowly building out my position. A couple shares here, a couple shares there. Because obviously with crypto being in this weird spot, cut in half as well, this could have some more downside. So I'm not going big on Robinhood quite yet. Kathy Wood is buying the shit out of this stock. It's definitely a stock I'm looking at for sure. Here's another stock that I really love that's been getting beat up is Adobe. A lot of people think AI is going to destroy this business model, but I'm not completely convinced. Peak to trough, it was down 40%. Down to $240. I am buying this a little heavier than other stocks. PE ratio at 1642 is wild. It's trading at a considerable discount, and I want to take advantage of that. I would like to build out to about 100 shares of Adobe. I'm about 20 to 25% there right now. 100 shares sounds pretty good to me. The PEG ratio under 1, always a great metric at 0.80. Price to sales at 5. Price to book at 9. A little higher than I typically like to buy. But this stock hasn't been traded. The forward PE is at 12, guys. Freaking 12? That's crazy. It's historically traded from 20 to 25 with the forward PE. It's at 11 now. That's wild. The market cap, what's that, 230 billion. It's at 115 now. 23.77 billion. Woo! Baby, you gotta love that. Free cash flow over the last TTM, trailing 12 months, $9 billion. You gotta love that as well. Total cash, they have over $6.5 billion on cash on hand, and the debt is right about the same number at $6.6 billion, but the levered free cash flow over the last year could wipe out that debt right away. So it's in a very good financial place. I love Adobe. I think this is a really interesting stock. And then I have one AI stock for you guys that I really love. That's Symbotic. Over the last year down, year to date down 22%. Over the last year up 140%. I do love this stock. It's one of my favorite plays in AI. So I'm going to break down this stock a little bit for you guys. Just kind of go over what this company is and what they do. Symbotic is an AI company that uses robotics as an automation technology company developing technology to enhance operating efficiencies in modern warehouses. The company automates the processing of pallets, cases, and individual items in warehouses. Its systems enhance operations at the front end of supply chain. I just love this because it streamlines warehouse productivity. And every item that you get goes to a warehouse at some point, right? So I love this. The robotic arms that they have and the way they move different pallets from place to place in a lot more efficient of a manner. I think this is a really interesting stock that could get a stranglehold on warehouse productivity in the coming generations. It has run up considerably over the last year, but we have seen a little bit of a sell-off, right? The forward PE is high. So we have to keep an eye on this and keep an eye on the productivity of this company long term. PEG ratio is a little high, but price to sales, pretty good there at 2.40, as well as the enterprise value to revenue. I like that. Okay, so 2.4 billion in revenue over the last year. I love that. So we're still getting towards profitability. So this is an early stage company that garners a little bit of risk, especially because this company and AI, you don't know how the market's going to value these AI companies and these robotics companies over the next couple of years. We'll have to see. But I like the way the company's set up. 1.82 billion in cash, only $30 million in debt. The short percentage at 10%. It's getting towards the higher range that I'm comfortable with, but the levered free cash flow over the last 12 months was 640 million. I love that. The debt, they virtually have no debt, which is huge for these small companies as they progress towards profitability. I love Symbotic. So they're the 5 stocks I'm looking at buying. I'm adding to SoFi as well. Symbotic, Adobe, Robinhood, Shopify, and Microsoft. I do want to see Shopify get a little bit lower before I jump in the pool, but I think Microsoft is a buy right now at these levels. The same thing with Adobe and Symbotic. And Robinhood, I would like to see in the 60s to really start jumping in the pool. And Shopify under 100, I'm a player for sure. All right, guys, thank you so much for tuning in this video. Don't forget to like and subscribe. Peace.